What's going on, everybody? Welcome back. Let's talk mortgage. Zach Macmillan here. This time around, I'm talking some good stuff with you. Down payment assistance. You want to learn about down payment assistance and how you can qualify, what it entails. Definitely going to want to stick around. Here we go. So let's start with the basics. DPA, or down payment assistance. That's what the acronym stands for. Essentially, first things first, let's cover this. Down payment assistance doesn't just cover down payment. It can also help with your closing costs as well. So if you're in need of money, short of funds to close, down payment assistance can help with both down payment and closing costs. But to segue into the actual topic itself, down payment assistance is money given to you from a particular entity, such as a community-based organization, a government-based organization, essentially funds given to you to help assist with paying your down payment and or paying your closing costs if you don't quite have the funds, or if you have the funds and still qualify and want to use these funds instead of using your own personal funds to help you obtain a home. Now, one important note about down payment assistance, or DPA, and I use that term throughout the video, DPA, so you won't get lost. But one important note about DPA is the fact that it's meant for first-time home buyers. However, you don't necessarily have to be a first-time home buyer to use down payment assistance. What I mean by that is the fact that as long as you are 3 years removed from purchasing a home, you can be considered a first-time home buyer under these programs as well. So what's going to happen is we're going to go back and obtain the last 3 years of your tax returns to show that you had no prior ownership and property to be able to use these programs that you qualify as a first-time home buyer, essentially. So not a hack. I told you we don't do hacks on this page. We just restrict information, truth, knowledge, wisdom, whatever you want to call it. These are the guidelines that we follow along with getting you down payment assistance. So when you are a first-time home buyer or 3 years removed from owning a home, you can qualify for down payment assistance. So something very important to note about down payment assistance programs is you're going to want to get the full details about the programs from your mortgage lender or that particular organization that provides the down payment assistance, because of the fact that each of them work a little bit differently. There are some traditional and standard guidelines that they may all share, but for the most part, they oftentimes operate in a different manner. And what I mean by that is some may be forgivable. Some may have a payment that you have to pay while you're living in your home and using that down payment assistance. Some may have a higher credit score guideline. Some may have a higher income guideline. So each down payment assistance program is going to be a little bit different from another, and therefore you're going to definitely going to want to have a conversation with your mortgage lender about the particular down payment assistance program that you may qualify for and what particular guidelines they have to make sure you fit within those. I don't want to go as far as to say there is a general credit score guideline for down payment assistance. There typically is a standard of a 640 credit score threshold for down payment assistance. However, there are down payment assistance programs out there that you don't necessarily need to have a 640 credit score for. Not all of them are like that, but some of them you don't necessarily have to have a 640 or 620 or 600 credit score for, but you still want to make sure you're talking to your loan officer or your program administrator to make sure that the other conditions you meet and qualify for still work. So one of the conditions that you'll see oftentimes with down payment assistance programs along with credit score is income limitations. Perfect example, if you and your spouse are earning both $100,000 a year and therefore making $200,000 within your household, it's very unlikely that you'll qualify for a down payment assistance program. These programs are meant to help people who are within that 80% average median income, sometimes a little bit higher, but typically help people who are more middle class income households to help them be able to afford down payment and closing costs while purchasing a home. So you'll see a lot of times on these down payment assistance programs that they have those income limitations to really help the people who may need the money for down payment assistance and closing cost assistance. So to give you a little backdrop of how DPAs work, essentially they operate one or two ways. Either they can come in the form of a grant or they can come in the form of a second mortgage. Let's differentiate those two real quick. So a grant is exactly, if you're familiar with grants themselves, a grant is essentially free money per se. It's money that's not meant to be paid back. It's money given to you that you qualify for under some form of conditions and guidelines that you had to meet to get these funds to use towards some form of event, whether it's going to school, whether it's buying a home, so on and so forth. It's free money that you may get from a certain community organization or a government organization to help you obtain something. So one form of down payment assistance can come in the form of a grant, in which case that money does not have to be paid back. The other form of down payment assistance typically operates as a second mortgage. And how that works is you still have to qualify for your original mortgage, the mortgage that we've been talking about on Let's Talk Mortgage, of course. But your principal, your interest, your taxes, and your insurance, that mortgage in particular, you still have to qualify for that particular mortgage with down payment assistance programs if they come with a second mortgage operation. And how the second mortgage operates is that money is given to you to help make your down payment and or your closing costs, but that money comes with some conditions along attached to it, i.e. the second mortgage up against that first mortgage you have as well. So you have your first mortgage, and then you have your second mortgage, your down payment assistance tiered right behind that, using your home as a collateral so that in the event that you sell your home, refinance your home, foreclosing your home, that money is meant to be paid back as that down payment assistance that you received for getting that home. Another condition could be the fact that you have to make payments on that down payment assistance program to pay that money back while you're living in your home over the course of that time. And at the time that you sell or refinance your home, the full amount is due to the organization. Another way it may operate is the fact that they may have that second mortgage back behind your first mortgage. However, it is forgivable after a 10-year period, after a 15-year period, a 30-year period, what have you. So you're always going to make sure that you're having these conversations with your loan officer or your lender to make sure you understand the guidelines that go along with the down payment assistance programs that you're using. Another piece of information that's very noteworthy when talking about down payment assistance programs is the fact that not all lenders work with every down payment assistance program out there. So if you're working with someone, a loan officer who is in Wisconsin, and you are looking to use down payment assistance, a program that is based out of Georgia, that particular loan officer or lender who is in Wisconsin may not be very familiar with the program that is in Georgia, or i.e. Authorized to even use that down payment assistance program per se. So when it comes to things of that nature, it's very important to contact a lender who works with whatever particular down payment assistance program that you may be trying to use. And to double back around that, that's why oftentimes it's good to use a local lender in which you're looking to purchase at, because they'll be more familiar with these particular programs you may want to use for down payment assistance. So keep that in mind, okay? Although they may have a program or a particular entity, that particular organization or program may not have funds available to give down payment assistance. You see it a lot with different county organizations and city organizations. these funds come from that local city, county, municipality, and therefore if they didn't fund that particular program, they may not have money to assist with down payment for you or closing costs. So you will definitely going to want to have a conversation with your lender and that local organization to make sure that funds are actually available to assist you with the down payment and closing cost assistance that you're looking for. So please keep that in mind. So here comes a quick one. You may be asking yourself, well, how do I find out what down payment assistance programs are out there? Well, very easy one. Call your local lender, whoever they may be, whether it's a bank, someone who works for a mortgage company, whatever. See if they work with down payment assistance organizations and which ones they work with. Another easy way to find out what down payment assistance there are around you, look up your local municipality, whether that be the city, the county, the state, your state you're in, and search that local city, county, state down payment assistance on Google or Bing, whatever you use. I've seen Bing, is more people using Bing now. I'm not sure where that came from, but anyway, use those search engines to find what local down payment assistance may be available for you through your city, county, or state. That's two easy ways to see if you have any down payment assistance programs around you that you may qualify for. Let's touch on a quick one. So is down payment assistance right for you? Now you might be thinking to yourself, well, if I got the option to use somebody else's money to pay my down payment and closing costs, I'm gonna take that option 10 times out of 10. And you know what? Most of the time I would agree with you. I was just having a conversation with one of my clients and we were talking about down payment assistance that they qualify for. This particular organization we were gonna use for them, they were gonna be able to give them 20% towards the down payment and closing costs to purchase a home. In the course of our conversation, I was sharing with them the fact that this down payment assistance program, it does come in the form of a second mortgage. And if they decide to refinance or sell their home before 30 years, that money does have to be paid back to that particular organization. And so the client said to me, you know what, Zach, I'm not sure if the home I'm going to buy right now, I'm going to want to live in for the next 30 years. I'm likely going to want to refinance since rates are a little bit higher. I'm likely going to want to move to a different home because I may not be able to get the size of home I need for my family right now. And so therefore, if I moved or refinanced or sell my home, that amount of money, that 20%, which is typically a good amount for if you're calculating down payment and closing cost assistance, that 20% that she was going to get from down payment assistance was going to have to be paid back to that particular organization. So she said, you know what? I think this particular down payment assistance program may not be for me because I know the home I'm getting ready to purchase, I'm not going to want to live in for the next 30 years. So therefore, I think I'll go a different route. So this is a perfect example of how a particular down payment assistance program or down payment assistance altogether may not be beneficial to you because it may not fit your goals and ideas of you purchasing this particular home right this very second. So you're going to want to keep stuff like that in mind when getting ready to purchase, okay? So that wraps up things here on this episode about down payment assistance. I hope you feel more educated, have more understanding of how it works and whether or not it's going to be beneficial for you and what you're looking to do. As always, feel free to reach out to me via phone call, email, message, what have you. Always tune in for more information about your mortgage needs here on Let's Talk Mortgage. I'll see you again next time.